Welcome to Hot Topics on the Edge of NFT. I'm Richard Carthon, and I'm here with our new Edge of NFT collaborator, January Jones.
Thanks, Richard. This is another production of Edge of Company, a rapidly growing media ecosystem empowering the pioneers of Web3 tech and culture. Stay tuned as we give you a quick look at the latest developments in the world of Web3, blockchain, and digital assets with our guest today, Ben Schiller, Managing Editor for Features and Opinion at CoinDesk. Welcome, Ben.
How are you doing? Good to be here.
Since Ben is with us this week, we'll look at some stories hitting over at CoinDesk. We will talk about Tron taking on financial crime, Bitcoin ATMs, and the decline in Bitcoin mining profitability, and hear about how Bitcoin is showing up in theater.
Let's dive in.
Tether, Tron, and TRM Labs have launched the T3 Financial Crime Unit to combat illicit activities involving USDT on the Tron blockchain. This collaboration aims to enhance security and trust within the crypto ecosystem by leveraging TRM Labs' anti-financial crime expertise, Tron's technological capabilities, and Tether's investigative resources. Since its inception, the T3 FCU has already frozen over 12 million in USDT connected to scams, including blackmail and investment fraud. A 2023 report from TRM Labs showed that the Tron blockchain was home to nearly 45% of all illicit crypto volume. Data from Tether shows that there's 60.7 billion of USDT issued on Tron, 53.9 billion on the Ethereum blockchain, and 712 million on Solana. So Ben, Richard, what do you think? Can these companies police themselves in this space?
We want to hope that they can, and we're getting to a place where eventually they should be able to do so. But at this point, as it relates to Tron, the short answer is no, but hopefully we can work to get there. And I only say that because, I mean, you just brought up a really interesting stat. Like when there's 45% of all illicit crypto volume coming from one ecosystem, that speaks volumes. I mean, not just that, they got dropped from Circle back in February of this year because they were concerned about being able to truly show their books and show like how much USDT they could actually prove that they have. So it's good that they're trying to put things in place to police themselves or to put on the actions of showing that they're trying to do better. But history has shown that they have not been able to do that. Ben, what's your take on it?
Well, I think it's a really interesting development, actually. And I think there's a little bit of PR and sort of self-policing going on here because, if you were to name two big projects in crypto that are in the sights of regulators and people who worry about money laundering, they would definitely be Tron and Tether. So it's interesting that they would come out with an initiative like this to say that we can police ourselves. And, they didn't just call it like a financial compliance unit like any financial company would have. They called it the T3 Financial Crime Unit, which has that sort of sense of a, law enforcement division. So that they're very much trying to speak a kind of game about like, well, we can handle this. We know what's going on and we can stamp out this illegal activity ourselves. And please don't investigate us. From government. Justin Sun, the founder of Tron, he's under investigation from the SEC for some of these issues. So, I think he has an incentive to prove to people in power and prove to the world that Tron can be trusted with money. And I think this is an example of them trying to show that.
Is this an avoidance in light of what we've seen with the Telegram arrest and trying to clamp down on these kind of transactions, but having it come from a government authority?
Yeah, this is a continuing question in crypto, right? Because, the original intent of crypto was to have a permissionless system where people could transact freely from, intermediaries. And these intermediaries in the form of, government authorities are saying, we don't like that. We don't want that. There's too much illegal activity. And so I think, you saw that with the Pavel Durov case, the Telegram case recently, where he was arrested in Paris over a lot of illegal activity on the Telegram network. And the authorities there were saying, you have to clamp down on this. And Telegram has now gone away and introduced a new initiative to do that. So I think this idea that, blockchain founders can say, well, we're just the network here, the platform, we don't quite know what's going on and it's not our responsibility. I think those days are really over, and these networks really have to conform to more sort of traditional standards of compliance and surveillance of these networks, which is sort of an antithesis to the kind of ethos of crypto originally, but I think it's a modern reality for these companies.
Yeah, I think just to add a final thought there, because I think bringing in the tide of what's happening over at Telegram to what's happening here at Tron, I think 2025 might be the year of great compliance, of having to clean up a ton of acts, because it's already being seen over and over again that, like you said, what was done previously can no longer be, especially as more institutional money is being flown in with Bitcoin ETFs, Ethereum ETFs, and the proposal of even Solana ETFs coming soon.
Right.
Things just have to get way more buttoned up.
Been in crypto for 10 years, and the end of the permissionless dream is a little hard to take. But on the other hand, when we're talking about serious volumes of money here and the potential for harm to be caused, then you have to really get in line and accept that crypto is a source of money laundering. It might not be as much as some of our detractors think and claim, but it is still a significant amount, and that's why we're seeing initiatives like this.
It's in the billions. I mean, these transactions are in the billions, and it's kind of hard to wrap your head around that. Well, moving on, let's talk about Bitcoin ATMs. So CoinDesk reported on a UK case involving the first charges ever for a person running a network of crypto ATMs. The accused processed over 3.4 million in crypto transactions through the ATMs. And crypto ATMs in the UK are currently illegal. Stateside, we've also seen them popping up all over the country, but there is not a law against them. The U.S. Federal Trade Commission has reported a 1,000% rise in scams related to these machines since 2020. Experts warn that their high value makes them appealing to hackers, leading to vulnerabilities such as malware attacks and network security issues. Many ATMs will require personal information for KYC compliance, which can be compromised. But the largest operator of Bitcoin ATMs, Bitcoin Depot, disputes claims that these machines are hacking targets. Now, I recently saw one of these in a laundromat of all places. And if we're thinking about the larger adoption of crypto for the general public, this seems like that it is something that would erode trust and be a barrier to adoption. Richard, have you seen any of these Bitcoin ATMs?
I have, and I personally am a fan of Bitcoin ATMs as an option for adoption for some people who are trying to get into the space and don't know the first steps. So the main reason when you look at adoption, and especially over here in the States, for boomers, for example, most people in the US don't really carry cash like that. They have cards, they use other things. However, a lot of people are very familiar with what it means to go to an ATM to take out cash. So if you have that same type of user experience to be able to take some of your money and then buy this thing called Bitcoin or Ethereum or whatever else you're buying at one of these crypto ATMs, and go through the same process, and now you have your first form, it is a first step into being able to have access to crypto. Like, is that the future? Will that be the way that people continue to do this? I don't think so. I don't know that ATMs really have a shelf life on them as well, as far as like the future of how people transact, but it's a first step. And so I think there's a lot of good use cases for them. I've seen them all over the country here in the US. One of the first introductions, me myself into crypto, was like looking at a Bitcoin ATM at a cafe in New Orleans back in 2017. So I think they definitely have some pros to using them. But Ben, what's your take?
Yeah, I mean, I think I have maybe a different take on this. I mean, an ATM, I can't remember when they were invented, but I think they were invented sometime in the 1970s. So, I mean, there is something a bit weird about talking about ATMs in the context of Bitcoin or crypto or digital cash or digital money, because, obviously that's all about getting rid of these kind of clunky old machines. So, and I think it's a bit of a double-edged sword in terms of adoption, right? Because on the one hand, yeah, it's, people are learning about crypto, or at least being made aware of crypto by seeing an ATM in a laundromat. But maybe they get a slightly sort of unhelpful sort of view of what crypto is, to think that it's sort of contained in an ATM. So I don't know. It kind of reminds me in the same way that people represent Bitcoin with a physical coin. You see that a lot. There is no real sort of. I mean, there are some physical Bitcoins, but very few of them, and it's not really a physical thing. So I don't know. I think the kind of the message here is a bit weird, and if they are honeypots for hackers, that's problematic too. And my feeling really here is that I don't think, as you say, Richard, that I don't think in 10 years' time we're going to be seeing a lot of Bitcoin ATMs around the place. And I think we'll find other ways to onboard the next generation of crypto users. So I kind of feel like this is a bit of a sort of a story on its way out, really, than really the future, as you say.
Well, being on its way out, somebody did 3.4 million in transactions in the UK, right? So I think that it's happening. And like Richard says, it's a familiar interface for people.
Right.
But my concern is people don't understand the security aspects needed for crypto and your wallet and all those things. Your average person really isn't prepared to really understand the risks. So adopting through, an ATM doesn't give you that education that you need to know to protect yourself.
Right. Yeah, I mean, this is kind of a long-running debate in crypto. If we abstract away the complexity of doing a crypto transaction, that might onboard people, but if it's not a crypto transaction, as it isn't really a crypto transaction with a Bitcoin ATM, really, are we really educating people, or are we giving them a false impression of what crypto really is? I don't know. It's kind of a debate there about the industry. If you take away some of the complexity, do you sort of neuter what it really is? So I don't know. It's kind of an interesting question.
I agree. Crypto security is one of the biggest aspects of the challenges of being in the space. And I see Bitcoin ATMs as a way, again, as a first introduction and not the main thing, right? But I also think from the complexity around, like, how do you make sure things are safe and secure? Because it brings up the age-old question, right? Like right now in 2024, even with your own liquid money, whether you have euros, USD, whatever, are you safer carrying cash, or are you safer having it being in your bank? And it then brings you to the idea of like, okay, well, if you're using that same concept for cash that you're trying to turn into Bitcoin that you can then hold, is it better in your possession that you can now do things with and put it in your bank or safe or whatever it is? And so it gets the wheels turning. It gets people thinking like, okay, what can I do next? And I think just getting people familiar and wanting to do those next steps in itself is a powerful tool. And again, I don't think this is here forever, but I think for now it is a path forward.
Yeah, absolutely. I mean, the security issues are interesting, and they do seem to be growing. So I guess the question might be that hackers are obviously going to target what they think is the weakest link in the system. So maybe this is partly a response to security getting better in the more online crypto industry, and therefore they're targeting what is perceived to be a more vulnerable system. So this might be the impact of other forms of crypto becoming more secure. So that's something to think about, perhaps.
Well, next up, let's talk about Bitcoin mining profitability. Bitcoin mining profitability declined significantly in August compared to July. According to a research report by investment bank Jefferies, the drop was attributed to a decrease in Bitcoin's average price and an increase in network hash rate, which represents the level of competition in the mining industry. Despite the economic challenges, miners experienced improved operational efficiency, partly due to days of extreme heat this summer, leading to better uptime. The report suggests that September may continue to be difficult for miners as Bitcoin prices remain below 60,000 and network hash rate continues to climb. US listed mining companies saw a decrease in their share of new Bitcoin mined, although they still represent a significant portion of the total network. So while mining economics were becoming less favorable, operational efficiency seems to be improving. Why does this matter right now, Ben?
Yeah, I think the mining industry is really fascinating, actually, because there's so many kind of complex dynamics at play here. So we had a halving, the Bitcoin halving earlier this year, which halved the reward for mining Bitcoin. So that obviously hurts profitability. You have a very competitive marketplace for miners, which makes the difficulty, always increase there. And then you have the, price of Bitcoin itself sort of plateauing over the summer and being in the kind of mid 50s now, where there might have been an expectation for the price to go up and therefore profitability to increase. So, and then you also have this kind of global industry, so you can mine Bitcoin anywhere, anywhere where energy is cheap and easily available. So you have this kind of very interesting industry, which is, the creature of many different dynamics, both geopolitical, energy related, Bitcoin related, market related. So it's kind of a fascinating snapshot of an industry, under pressure all the time. And I think what's happening now is that, we're seeing some consolidation in the industry as well, because some of the smaller players are not able to compete anymore. 5 years ago, you could stick a miner in a country with cheap energy, and then you could compete with a bigger company. But I think that those days are really gone, and you're seeing big players like Marathon, for instance, really scoop up more and more market share, because they're able to have that scale and that efficiency that the smaller players can't match. So, it's becoming harder and harder to compete, and the rewards at the moment are not there that they might have expected a few months ago.
Yeah, I think people need to stay cognizant of the long-term game of what it means to be a Bitcoin miner. Like Ben was saying, the barrier to entry was very low, where you almost were immediately always going to operate at a profit. Whereas now it's a lot harder as energy is becoming more expensive, and also price of Bitcoin is going up. So right now, for a miner to be profitable, you basically need a price of Bitcoin around $80,000. And clearly we're below that right now. But for context, in 2012, the price on halving day was $12.35. In 2016, it was $650. That's a huge, huge, huge multiplier in a matter of 4 years. And then look at it again. In 2020, it was $8,821, the price of Bitcoin on that halving day. And then fast forward to 2024, the price was $64,000. Huge multipliers every time, right? This takes time, but it doesn't mean that right now it's profitable. So it's hard for companies to survive this moment while it's below the threshold to be profitable. And so what do you have to do? You either have to sell your company to like Ben was saying, like Marathon's out here scooping up all these players that can't survive in this moment, playing the long game, knowing that like, hey, if history repeats, we're going to be okay. We just got to survive long enough to get there. And then when they do, they crush. And so you're going to keep seeing this consolidation happen. And it's really tough for miners right now with the price of Bitcoin where it is. But in the long term, just based on how history has been, they'll probably be okay if they can survive right now.
Yeah. So, I mean, a lot of miners are actually, they're either consolidating or they're diversifying as well. So we've seen a lot of miners get into AI compute, which is obviously in huge demand at the moment. So they're basically getting out of Bitcoin and turning their machines over to, AI compute functions, and also high-speed, equity trading as well. That's another activity of diversification for these companies. So it's going to be interesting to see. And there's kind of a more fundamental question about the mining industry, because it's not only a kind of something you do to make money. Obviously, this is crucial for the long-term viability of Bitcoin itself. We need these mining companies to be validating these transactions in a decentralized way in order for Bitcoin to be Bitcoin. So that there is this kind of long-term debate within crypto, particularly in Bitcoin circles, to say, well, if the reward is going down and down and down, and therefore there's less incentive for miners to be involved to validate transactions, will that at some point lead to some kind of security issue for the integrity of Bitcoin transactions? And if that happened, then Bitcoin might potentially be not Bitcoin as it is now, which is a diversified, decentralized network that we can really trust the veracity of. So that's something to think about long term.
Well, we've been talking a lot about Bitcoin today, and Ben, I saw on your X account that you are putting on a play in New York about Bitcoin, love, and freedom, so it says, and it's loosely based on the FTX scandal that CoinDesk broke. Can you tell us a little bit about your jump into the theatrical world and bringing cryptocurrency with you?
Well, thanks for mentioning that. Yeah, we're producing a play in the East Village in New York City in October 23rd to 26th. It's called Happenstance, and it is a play about a Bitcoin coder who's going to prison and his struggles for freedom in different ways. And yes, it is based a little bit on FTX, which was the scandal that CoinDesk broke, and also some of the other scandals and sort of dramas that we've seen over the years with people getting into trouble and how they get out of that. So please check it out. The website is called happenstanceplay.com, and we're selling tickets now. So please come along. It's going to be at the Crane Theatre in the East Village, and we're looking for support and hope people can make it.
Awesome. Well, we really appreciate that. Everyone listening, make sure you go get a listen, especially if you're in New York City. Go check that out. And also want to say, this has been a really fun show. It's a wrap for today's hot topic. We've covered a ton of topics, from Tron taking on financial crime to Bitcoin ATMs to the decline of Bitcoin mining profitability, and how Bitcoin is making its way to theater, with Ben putting on a play in New York about Bitcoin.
Stay curious, stay secure, and keep pushing Web3 boundaries. This is January and Richard signing off from the Edge of NFT. Catch you on the flip side of blockchain.